Hi, Matt. How are you today?
Hey, I'm doing great, Leo. Thanks for having me on this morning.
It's amazing. It's a pleasure. Thank you. So it's yours next 1 hour or even little more. Doesn't matter. Carry on, buddy. Thank you.
Okay, thank you very much. Man, I'll tell you what. The first thing I'd like to say is I wish I was where Coach Rakesh is. He's got a beautiful background, looks like a beautiful backyard. I need to get one of those views behind my screen as well. Um, I'm going to switch over to a PowerPoint in just a second. I've got a couple of videos I'm going to show you guys. I want to tell you about what we're doing in the multifamily real estate space. And at the end of the day, I got a couple things. My goal here today is that when we all walk away from this talk, that you've learned something that you can take with you, some actionable things you can take with you. That's the most important thing. And then I'm going to tell you about a little real estate club that a secret society, no less, that I've recently started. And I want to show you what you can do to be part of that and what that looks like and all the cool stuff that's involved. And what I'm going to do here is I'm going to try to do my, let's see, 1 second. I think that's how it'll go. And you're just seeing a screen, so I don't think my presenter platform comes up that way. Anyways, we actually did one of our real estate meetings this morning. It's called the Dealmaker Society, and we have a big group of people that do deals together, and we network together. We meet on Saturday mornings and go over stuff like that. And one of the guys that I was talking to this morning in this coaching program, or in this in the Dealmaker Society membership program, he came in and we help people set up their automated marketing systems so that seller leads come in, and we help them put their, not only just teach them how to do real estate, but teach them how to set up their business so that their business is automated, right? We're all going for financial freedom at this level. If you're getting into multifamily real estate, if you're getting into making, big investments and bigger deals, you're looking for financial freedom. You're looking to preserve your money, make sure that it grows properly, and that you're able to live the life that you want to live. And in order to do that, as an investor, we want to automate a lot of stuff. And so this guy was just technologically challenged. We spent 3 weeks just trying to teach him how to use an email and do all these kinds of things. We set up his marketing system. He's been in our coaching thing for 4 weeks, and he just got his first contract accepted on a new property. Now, for those of you guys that have been in the real estate market for a while, you probably know it's not easy to go out and find a great deal. In fact, we always say great deals are not found, great deals are made. And so that's kind of one of the things that happened this morning that was exciting. So before I go too far, and that was just a quick story to share with you. I've got a little video I want to show you before we get started with a real learning today, and I'll go ahead and do that now. If there's any sound issues, Leo, just please forgive me and let me know if the video needs to be played differently.
Think about where you sit right now. Feel those questions that keep you awake at night. Think about what brought you here. No, what really brought you here. You didn't just come here to learn real estate or flip houses. You may not even be here for the money. You came here to create real bulletproof wealth, to attain the life you know you were meant to live, to build an empire, a legacy you can pass on. You are not alone in your fight. You do not have to do it alone. Countless entrepreneurs have sat in that same seat where you are right now. One entrepreneur in particular, with those exact same questions gnawing at him, keeping him awake at night. A third-generation contractor set out to build a more promising future, not only for him, but for his family. A real legacy, to provide them with a better life than he had. He knew he couldn't be the husband, the father, the provider he'd set out to be by continuing to follow the masses. After the Great Recession, he shifted his perspective on real estate and found the answers he was looking for. Sifting through all the glamour and haze, he discovered the keys, the secrets to real wealth. These keys took him from the trenches, literally, with a shovel in his hand, to building a real estate firm worth millions of dollars. He created the ultimate investment strategy, showing real estate entrepreneurs, both seasoned experts and young guns alike, how to make more money from one apartment deal than with 100 houses. Harvard University lecturer, best-selling author of the Dealmaker Manifesto and the Ultimate Investment Strategy, real estate master coach Matt Skinner, the Dealmaker.
All right, with that, I wanted to give you just a quick introduction of of who I am, I'll give you a quick background. I started out in real estate investing almost 20 years ago. I started as a general contractor. I was a young kid, started a new business in Los Angeles, California, and I quickly got the opportunity to build some really big projects for some really wealthy folks. In fact, some of them were famous, names you might even recognize. And so I knew that I wanted to get into real estate investing. I was in my early 20s. I went to a course. I invested like $5,000 at the time, which was like more money than, that was way more money than I've ever invested in any kind of educational program. It scared the, what out of me. And I learned how to start flipping houses. And then I started, so I'm doing my construction business. I started flipping houses. And then I started asking my clients that I was doing construction for to invest with me on some speculative projects. So my career started that way. Things were going well. We started building spec homes. We built condos. I built some shopping centers in Los Angeles and did lots of really cool things. And then the market changed. And you guys probably, I know you guys didn't experience that in Canada as much as you did in the United States, but about 10 years ago, we had a really big real estate market correction, and it was devastating for a lot of folks. And I'll share more about that process a little later, but that was the catalyst for me, right? I was a house flipper. I was a house builder and seller. Basically, I was a transactional guy in real estate. And I know a lot of folks are when they start out. Flipping houses is a transactional thing. You got to do it to make money. You got to do it again to make more money. You got to do it again and again and again, or the money stops flowing in. But then I found multifamily investing. And I realized that really was the answer to the future. Like, I wanted to have a foundation of stable, secure cash flow coming in so that I could go take bigger risks on other projects. Like my multifamily investing is like my safe, secure, my vault of where my true wealth comes from. And that's why we put the multifamily investing as a foundation. So today, that's a little bit about my background. We'll dig into that a little bit more. Today, I want to talk to you about, I'm going to teach you how to retire early and investing in apartments. We've got essentially, 3 key things that I want you to take away today. Number 1, we're going to talk about how do you make money in multifamily real estate. Making money in multifamily real estate is obviously the key. We're definitely going to touch on that, and I'll give you some really key takeaways that you can gain from that. We're also going to talk about how to select the next hottest market, right? Imagine if you could see the growth that Ontario has experienced in the last 10 years, or imagine certain cities, certain segments. Different cities boom at different times. And so how do you get out in front of those kinds of trends? How do you know when the next big economic cycle is coming to a city, to a local city? Because real estate's a local sport. So we got to make sure that we're investing in the right markets at the right time to maximize our returns on investment. We'll talk about selecting markets today in this presentation as well. And then last, this is probably the biggest one I hear from people that are just starting out in real estate, especially in the multifamily business, is I keep making offers, and they're just not getting accepted. I'm not seeing any great deals. I'm not seeing any good deals even. I'm not even seeing any deals that make sense, some people would say. And what I'm going to show you is what we do to get our offers accepted using what we call the Dealmakers 3 offer approach. So one of the things that I want to talk about with you is I've been doing coaching almost as long as I've been doing, almost as long as I've been doing real estate. I've always had people that work for me. I would teach them what I learned, and I would have them, work for me as an employee at a certain level. And then as the years went on, we started having outside contractors. And over the years, I've coached literally thousands of people on real estate investing. And in the last few years, I've mostly just been doing one-on-one coaching. So I've been doing one-on-one, working with individuals literally as more like a consultant than a coach. And I show them how to not only do multifamily investing, but I teach them how to build systems around their business. Later, we'll talk about what we call the Dealmaker 5, the 5 pillars of Dealmaker. And the big key here in real estate is you can take all the classes, all the courses. I can teach you the real estate tips, tricks, and techniques. But if you don't know how to market yourself as an expert, if you don't know how to sell, how do you convince a seller to sell to you instead of selling to someone else? That's an important aspect. If you don't know how to negotiate or install systems in your business so that things happen over and over again. And then last is financial intelligence. And we'll talk about those five pillars in just a minute. But for now, what I want you to take away is we're going to learn these 3 things today. And I also share with you how you can get involved in our secret society, which we call Dealmaker Society. Now, the way that this came about, like I said, I've been coaching people one-on-one for many years, but recently we just opened up a membership club, essentially. And what that is, it's a membership group dedicated to sharing insider secrets across the market. So no matter what city or state or where you're at in North America, we get together on Saturday mornings. We get together as a group, as a network, and we share insider secrets. We had one of our meetings this morning, and we had some really powerful results. We got people not only doing deals in their own market, but networking together and finding that one person's really great at finding deals, another guy's really good at putting capital together. Maybe somebody else is qualifying loans in a great way. Asset management's another perspective. And so when we begin to work together, we can create a really powerful synergy. And that's what this Dealmaker Society is all about. So let's see, what is the Dealmaker Blueprint? Dealmaker Society is an elite society of real estate entrepreneurs dedicated to internally sharing this insider information so that we all grow and get better together. And Dealmaker Blueprint, and what you're going to learn, or what Dealmakers do, I should say, is for our Dealmaker Society, when you're looking to buy multifamily real estate, first thing we want to do is select your target market. We're going to I'm going to teach you how to put together an automated marketing system so that you have motivated sellers. Motivated sellers are people that need to sell, not just want to sell. We want to attract motivated sellers before they go to a real estate agent or go to a broker, because we want to go direct to sellers as often as we can as investors. The next thing we're going to do is set you up with scripts so that you can talk to sellers, talk to buyers, talk to investors, talk to potential partners, and know exactly what to say, what questions to ask, and what to say, so you'll have instant credibility. We're going to talk about our 3 offer approach inside of this, which is every time you go direct to seller, we're going to show you how to make 3 offers. And what that's going to do is it's going to exponentially increase the amount of deals you're doing. See, when you go to a seller and they've got a situation, they're motivated for a certain reason. They've got a problem, they've got a certain circumstance of why they need to sell. And sometimes they're not bad circumstances, right? Sometimes they just have another asset that they want to trade up to, but we need to identify why they need to sell. And then we can give them different solutions, different options for them to be able to get the best opportunity from them. And when we go through the 3 offer approach, I'm not going to show you how to make all cash, close quick offers. Everybody knows that. In fact, that's most people's one-trick pony, right? All cash offer. I'm also going to show you how to write overpriced offers that will also make sense for you. How do you make a deal with somebody who has an unreasonable expectation of what their property's worth? We're going to talk about that with the 3 offer approach. Next, we're going to talk about our check down system. Our deal makers have a system where every time you talk to a direct to seller, you should be making money from it, right? You should be making money from every single time you talk direct to a seller and they're motivated to sell their property, whether it's a perfect asset for you or not. We're going to show you how to make money from those deals for sure. And part of that is in flipping option contracts. Now, a lot of people have heard of wholesaling in real estate. Wholesaling is kind of a slang term that happens to, I think, has kind of crept into the single family real estate investing business. But for the most part, flipping contracts or wholesaling has been a part of commercial real estate for decades and decades, something old, people have been doing for a long, long time. But there's a right way to do it and there's a wrong way to do it. And wholesaling, all that means is you go out and you find a great deal, you negotiate great terms, put a great price tag together, you put it under contract or perhaps an option, an exclusive option to buy that property. And then you have the opportunity to sell that option. There's value in that. And so we'll show you how to do that stuff as well inside of the Dealmaker stuff. We talk about partnerships, talk about raising capital, raising private money, even raising private debt, if that's something that you wanted to get into. I teach all of that inside of our Dealmaker program. And that's a very powerful, it's a whole nother business than real estate, right? The financial side of things is completely different, but it's very important, especially if you're going to be putting groups of people together to invest with you in the great deals that you're going to be putting together. And then last but not least, people have said that your network is your net worth, and there's a lot of truth to that. But we talk about, and we teach you how to really build your network of people that are motivated just like you, who share your same goals and your same values, so that you can do deals together. I'm sure just in this room right here, it looks like there's quite a few people here watching around. I'm positive that this group, if we got together and really started thinking about like, what could this group pull off, right? There's so much intelligence from different levels, from different places. There's so many resources and so many opportunities just from this network alone. Imagine if you focused on growing that network on a regular basis and being part of an elite secret club that emphasizes that. So before we go on into the training, I want to touch on a couple of things. Keys to success. Number one thing to be successful in life is you got to be clear on what you want. If you're not clear on what you want, if you're not focused on what you're going after, you know, you're easily knocked off course. I've had this problem a lot in my life as an entrepreneur, as a type A type of person. Like I see those shiny objects, the next new business, the next new thing, the next, and it's been very good for me, a wisdom gaining exercise to be able to learn how to say no to even good opportunities, to just stay focused and know what you're looking for. So when I set out, I wanted to build a portfolio of multifamily properties that would provide me cash flow to have financial freedom. And so that was a very clear goal for me on what I wanted to create in my life. And so what I would invite you to do is just get really clear on what you want to create inside your life and how multifamily can augment that. And that's the big key. So the next key to success, work on what you focus on relentlessly until you're successful. Keep at it, don't quit. And last but not least, you got to have a mentor show you the path to get where you want to go, right? No one gets where they want to go very easily trying to figure it out on their own, especially in today's day and age. There's so much information out there. There's so much that you can gain from others. You know, we live in an amazing time. I don't need to tell you about that. But we live in such an amazing time that all this knowledge is out there. The knowledge is important, but it takes another human being who's walked the path before you to give you the wisdom so that you can use that knowledge to the best of its ability. So who's this masterclass for? This course right now that we're talking about today, if you have a burning desire to be successful, you're in the right place. If you're looking to do something great, something that your wife and kids would be proud of for you for doing, buying apartment buildings is very exciting, very successful, and will make your friends, peers, and even those you're in a relationship admire you a little bit, which is kind of fun. And if you have a desire to master the art of having it all, you're in the right place. Because not only do we talk about real estate investing in our Dealmaker Society programs, but more importantly, we focus on who you need to become in order to be a deal maker. And deal makers are people that can go into any circumstance, any situation, and make deals and get paid. Have a place to be able to go create income for you and your family on a moment's notice by knowing what to do inside of the strategic market of multifamily investing. A lot of that has to do with the 5 pillars like we talked about earlier: marketing, selling, negotiating, creating business systems, and having a sound financial IQ. This program is not for people who think they know it all already. It's not for people that whine and complain or anybody that thinks they're a victim of anything, because we are entrepreneurs and we can take care of business that needs to be taken care of. The big picture is creating your own economy inside of owning apartment buildings. One of the number one, or I should say the only reason people fail inside of this program is no focus. Focus is getting clear on what you want to achieve for yourself. Focus is getting clear on what market you're going to become an expert in. I would say the number one thing that I see people coming in to learn real estate investing, learn multifamily investing specifically, is coming in and thinking you can look at deals in different cities and different provinces and different states and all kinds of different things, and thinking you can master all of those locations. And the truth is, real estate is a very local business, and you're going to need to be able to master the localities, the local regulations, the local trends and things like that. So the number one thing I teach my students who are learning multifamily investing to do is pick one city, one target market of where you want to do your business, and stick to it, master it, be the best at that local market. And that's a big takeaway that took me a while to learn. I still have that same shiny object syndrome that we've talked about earlier, where I still want to go look at a deal over here, look at a deal over there, and oh, there might be a great deal over here. But I've been doing this now almost 20 years in the business, 10 in multifamily, and we still do Texas, Phoenix, Arizona, and I have some development projects in Southern California still. So we do development in Southern California where you can build things cheaper than you can buy them. It's probably true in Toronto, a very similar type of market where If you're building new, it's cheaper than buying existing, right? Prices go up after they get built. Other places in the States and even in secondary, markets where sometimes it's, it's cheaper to buy an existing building than it is to build new. And so we want to look at those things when we're checking out our markets. But focusing on your target market, mastering your target market is going to be the key to your success, because you're going to want to know the ins and outs, who the players are, what the market's doing, and things like that. When we get into more details on multifamily, actual details, I'll show you why that's really important. So I want you to ask yourself this. I'm assuming you're here today investing in yourself on a Saturday because you're the kind of person who is looking for something more. You're looking for something more, deeper spiritually for yourself. Maybe you're looking for something more. You crave success because you want more money to leave a legacy for your family. Maybe you want more success. You're here to learn more things. So you have different opportunities or different options. Maybe you're here because you think the sky's falling, the world's about to implode, and you're looking for, what is the next move that needs to be made? I better go learn some things. Well, first of all, I want to congratulate you, because making that investment in yourself on a Saturday, spending time with folks that have a similar mindset, similar goals, is the most valuable, most important thing that you can do. But I'm going to suggest that financial freedom is the key that will access all the other things that you want. Financial freedom, for me, has given me the opportunity. Last year, almost 2 years ago, I had a sudden back injury, and my left leg was paralyzed for weeks, and I had to have an emergency. You have to get in for surgery immediately. I had good insurance, but I don't have a back surgeon on call. So I immediately got to work looking for the best spinal surgeon I could find. And let me tell you, it wasn't in my insurance program. It wasn't and I wanted the specialist. I wanted the best. I found the best guy who had the best equipment, the best track record, because he's working on my spine. And I thank God for every day I worked hard, stayed late, worked on Saturdays, showed up and took these kinds of classes so I could get the opportunity to fix my back and my leg. And I'm happy to report I can walk just fine now. I'm fully recovered. But I don't know that I would have been if I didn't get the best. And I know that, and I think that's so important, because our health is the most important thing to us. And so, keeping that in mind and being able to take care of yourself or a family member in the time of need is the only reason why I need. There's a lot more reasons too. When you have financial freedom, you have the opportunity to give back. You've got time to volunteer, time to help young entrepreneurs, time to help causes that you care about. You have money to invest money in different causes that mean something to you, and you can help people out. Most importantly, when you're financially free, your relationship's gonna definitely benefit. You know how happy your wife is when you come home and you've had some success, and you bring home the bacon, so to speak, and she's happy. More money usually equals more sex, and that's important. But most importantly, here's one that we don't think about too often. We live in a world that's changing rapidly, even more so in just the last 6 months. Things are rapidly changing. And the big thing that we're going to be facing soon is we're going to be facing what I'll call the big divide. There's a lot of folks who work really hard, and they're great, honest, hardworking people that will probably be replaced by automation and robots. And I'm a little off tangent here, but the thing is, now is the time to choose what side we're going to be on in history. I believe there's a time coming where there'll be consumers and producers, and there's really, I think the middle class is whether it's intentional or not, is phasing out. And so it's time to make a decision. And I'm sure just the fact that you're sitting here this morning tells me that you've already made that decision. But there is a decision to be made, because in the future, the middle class is shrinking. You're going to need to be making choices if you're going to be an owner of assets or if you're going to be a consumer of products. There's only going to be two types of people, in my view, in the future, and it's going to be owners of assets and consumers of products. And now is the time to decide. So if you are not an owner of assets now, you're not a producer of value, you need to find a way now to get on that side of the equation, because it's going to hurt you long term if you're not. Robots are going to change a lot of things. Automation's changing a lot of things. The whole world's changing a lot of things, even politically. And I think it's important that you find yourself on the right side of the coin when that happens. So financial freedom is very, very important. I got started in multifamily for that exact reason. I shared with you guys earlier. I was building. I'd build and sell, buy, build, sell, buy, build, sell. And I made my investors a ton of money. I made myself a lot of money. But the reality was when the market changed and there was nothing else to build, or land prices got too high, or whatever the next thing was, for me, it was a recession, a massive recession. The music was over and there was no more income coming in, right? I didn't see past the market cycle that I was in. Everything was going up. I thought it was Midas. I had Midas touch. Everything I touched turned to gold. And then boom, rude awakening. And so the blessings with multifamily is the long-term cash flow and ongoing income provisions from multifamily investing if you're investing for cash flow. I got started, my construction business kind of came to a grinding halt. I was looking for the next move to make because I didn't have a construction business that was continuing. I remember going to this breakfast networking meeting on a Saturday morning, kind of like you guys are all here together this morning. It was a group of real estate guys getting together, and this is like the depth of the recession in California. The sky is falling, real estate prices are just plummeting. The world's going to hell in a handbasket. My construction business is, for all intents and purposes, not operating because there's no work to do, no business, no new construction going on. And I see this guy pull up in a brand new Aston Martin. This is a real story. And I said, man, that's a beautiful car. And I went over and looked at the car. I like cars. I'm checking it out. I said, how did you the whole world is losing everything. What are you doing different? Show me what you're doing. And he said, man, I've owned apartment buildings for the last 7 or 8 years. We've done really well. And, when nobody can buy houses, they're not giving mortgages away, like candy, like they were for a while there. The rents go up. There's more demand for rental housing. So when the economy when the housing market had a
suppression, the multifamily market was going up. They raised rents, and he bought himself a brand new car while everybody else is losing a lot of money. And it was right there, that day, that I decided I'm going to be on that side. I want to be on that side of the game. And so I literally asked him that day if he would mentor me. I took him out to breakfast every Wednesday morning or something like that for months. I ended up buying a couple of properties from him, and I bought a couple of properties with him. And it turned out to be just a beautiful relationship from that. And but he was the one that really turned me on to doing multifamily for the long-term cash flow, tax benefits, and growth. And so my next step was I actually hired a professional mentor, someone who would teach me and coach me how to do this across the country. I selected a target market and I started in California. So people say, oh, you can't find great deals in cities like Toronto and places like that. You can, absolutely can. I'm gonna show you how to do that. I'm gonna show you how I did it. But I started in Los Angeles buying properties. And it's a very similar type market, 2-3 cap markets, probably low cash flow is typical, rent control situations where getting, tenants out if you want to renovate buildings is challenging. So I started in all that. And there's specific things you can do that will help you out in those businesses. And I also want you to know I went to other markets like Texas and bought larger properties for more cash flowing reasons. So these are the reasons why I got into multifamily. A couple things we're going to cover right now is making money in multifamily. We're going to talk about the 3 strategies to employ investing in multifamily apartments. We're going to talk about what cap rates are and what they mean, what they really mean. And we're going to talk about how to do a reposition deal. Now, first I want to start with 3 strategies, right? There's 3 strategies for investing in multifamily real estate. Some people like to invest for what we call appreciation. They're making an investment with the idea of, I'm going to put my money into a safe, secure asset. They usually pay cash in a low cap rate market. And their strategy is to buy and hold it for a long period of time and let that money or let that asset appreciate. And that's one way to make money in real estate. That's typically what the strategy is in large cities with low cap rates. And the reason for that, we'll get into in just a second when we talk about cap rates, is because there's lower risk in larger cities. Now, other types of assets, other types of strategies you want to use for multifamily is cash flow, right? I told you a few minutes ago that cash flow was one of my larger reasons for getting into multifamily, and it's definitely a strategy. So if you're looking to invest in cash flowing assets, you probably want to go to markets that are a little bit lower priced, They're a little bit, and they're a little bit, you know, in secondary markets. I can name some of those types of markets in the States. I'm not as familiar with some of the Canadian areas, to be honest with you, but in the States, you might look at places like the South or Ohio or places like that to just primarily invest in cash flow. You can buy them, you can get good cash flow, but they're probably not going to go up tremendously in value. They're probably not going to go down tremendously in value. They're going to probably stay about the same. But if you invest in places like Toronto, New York, Los Angeles, Chicago, big cities have huge demand for affordable housing, which is multifamily. And that huge demand makes the risk very low. Therefore, there doesn't have to be a large reward for people taking the risks of owning large apartment complexes in big cities. So that leads me into what cap rates mean. If you're familiar with commercial real estate, and I'm imagining you guys are being here today, commercial real estate is valued based on cap rates. And a cap rate is simply a measure of how long it would take to get your money back if you paid cash for a property. That's literally the ratio. But that is such a confusing piece that most people have confused. Most real estate brokers, most real estate professionals get this wrong. What a cap rate really is a measure of risk. It doesn't mean it's a good deal. It doesn't mean you have a bad deal. A low cap rate doesn't mean a bad deal. A high cap rate doesn't mean a good deal. In fact, sometimes it's the opposite. But what cap rate means, what cap rate really is a measure of risk. So if you have a low cap rate on a property, it means there's not a lot of risk. And so when you're an investor and you get to make an investment in something without a lot of risk, it doesn't require a large return because it's a safe investment. Conversely, if you're going in and looking at a lot of people that teach multifamily real estate teach, you got to find 10 cap, 10 cap, 10 cap, 10 cap. And I say 10 cap's the riskiest type of deal there is. Why, do you really want a 10 cap? What you really want is a 4 cap in a 3 cap market is a great deal, right? So you're getting a good, that's how you know you have a relatively good deal. It doesn't matter if you're operating in a 7 cap market, then an 8 cap's a good deal and a 6 cap's not. That's as simple as it is. So cap rates are just as relative as valuing single family homes. If I asked you right now, if I said, hey, I have a single family house available for you to purchase right now, it's a great deal, it's only $500,000, would you take it? And your next question would probably be, where is it, right? Because a $500,000 property, let's say in downtown Toronto, is far different than a $500,000 single family house in, say, Detroit, Michigan, right? Radically different markets. Is a $500,000 property a good price? I don't know. There's not enough information. Same thing with cap rates. Is a 5 cap property a good price? I don't know. Where is it? If it's in a 3 cap market, it could be a great price. If it's in a 7 cap market, maybe not so much. So we want to understand what cap rates are and how that works. So I don't want you to be afraid of investing in low cap rate markets. In fact, there's a lot of money to be made in big cities and in low cap rate markets. They're safe, secure investments. It also comes right back down to, what is your strategy? If your strategy is safety and security and not losing money, then you want to buy low cap rate properties, typically low leveraged, and hold them for long-term appreciation. If you want to buy cash flow deals, you want to buy deals in markets that are a little more risky, so there's higher return, and you want to leverage them as much as you can so you can maximize your cash flow, right? You want to get that cash as fast as possible. So it's just a different strategy. Of course, the third strategy that we have is if you're looking to make quick cash, you're probably going to want to be looking at reposition deals. Now, this is the most complicated and the most risky strategy in multifamily, but it's also the way to make the most money the fastest. In fact, I wrote a book called The Ultimate Investment Strategy almost 10 years ago. I think now they call it buy, rent, rehab, or buy, rehab, refi, and refinance, or something like that. I don't know. I forget the acronym. We call it The Ultimate Investment Strategy. I wrote a whole book about it about 10 years ago. And ultimately what it was, I discovered it by accident. I found a property that I was able to buy relatively inexpensively just in the suburbs of Los Angeles. The seller was Marcus & Millichap was the listing agent. Bank owned it. I came in, I bought the property for a great price. We fixed it up. I leased it up. And within a year and a half, I refinanced it. Not only did I get all of my investment principal out, we pulled out, I think, $160,000 in cash from the bank, tax-free cash from the bank. And you just keep that property. So you got no money invested, cash out, and the property cash flows. That is the ultimate investment strategy. And the formula for that, I'll give it to you right now if you want to jot this down. The first thing you want to do when you're evaluating a reposition deal is determine the highest and best use for the property, right? What's the best way to make money from this property? And sometimes that is tearing it down. Sometimes that is fixing it up. Sometimes the best thing to do is nothing. So if you're going to go and you say, okay, the highest and best use is to fix this up, raise the rents, and we'll create a higher value, which is a tremendous strategy. I love that strategy. We use it all the time. If you're going to do that, first thing you want to do is determine how much will the property be worth? What's the value of the asset after it's been repaired? In single family homes, they call it after repaired value. In multifamily homes, we call it stabilized market value, SMV, because stabilized, the apartment only has more value, not after it's fixed up, but only when it's leased. Then it has value. So we want to determine what's the value of the asset going to be after it's completed and leased up and rented and creating money, making money. We start there. The second thing we're going to do is say, how much do you think you should make? Pay yourself first. How much should you make by doing this project, fixing it up, doing all these things? And you're going to subtract your number directly from that top line. Then you add up all the direct costs, carrying costs, negative cash flow, construction maintenance, all those things, and you're going to subtract that from that number. And that leaves us with what we call our land residual or strike price. That's the value of the land. That formula I just gave you is how appraisers determine the value of land. And one of the things that we teach in Dealmaker Society is we teach appraisal. We don't teach you how to estimate values. We teach you how to do appraisals. You'll know how your bank's going to appraise your property when you're buying it. And that's important. That's really important because you'll be able to do it the same way, how to run comps, do cap rate comparisons, rent comparisons, absorption rates. I'll show you how to calculate all this stuff, and it's really, really powerful. So the three strategies are appreciation, cash flow, or forced appreciation, or what we call value add. There's one other way to make money in multifamily real estate, and that is flipping contracts or flipping options. And I'm going to show you how to do that in a little bit. Next thing we talked about that I want you guys to take away from this is how to choose the next hottest market. How do you know where the next place to invest is going to be, right? How will you know what cities to go into? A lot of years ago, I was in California. I got into multifamily investing, and I was looking for a market to buy, to start hunting in. And what I found was Texas was literally advertising to bring businesses into Texas. And I said, man, if they're advertising to bring businesses in, guess who's going to follow? Workers. And where do workers need to live? Probably in apartments when they first moved to a new town. And so that's what attracted me to Texas investing. Went out to Texas, bought a lot of deals. The next time I changed markets was in 2014, was when Apple announced they were going to invest $2 billion in the Phoenix, Arizona market. $2 billion, creating jobs, building facilities, all kinds of things. So I got to get out in front of that. And I did, and we did very, very well inside of that marketplace. And so how do you determine what markets you should be investing in, right? Number one, the closest you can get to home, the better, because you're going to have more, it'll be easier for you to operate inside of your market. So choose a market that's closest to you. But if I could give you one takeaway about researching markets, it would be this. Don't get into markets that are already hot. If they're already hot, if everyone knows about them, you're late. If you read the Marcus and Millichap report and it says the number one hottest market to invest in is San Diego, California, or wherever they determine it is that year, you're too late to get in that market. What you want to do is get in and find an economic development plan. And all municipalities create this. It's how they plan for their tax revenue going forward, how they're going to sustain their own government self. And so you can get your hands on this economic development plan, and they'll tell you who they're trying to attract, what businesses we're trying to attract to our communities, what kind of tax strategies we're going to deploy to try to increase people coming to live there. And that's what you want to know. We want to see before it happens where people are going to begin or continue moving to. And so it really just comes down to population. At the end of the day, multifamily investing lives or dies on the population. If a community is growing in numbers, the values go up. It's a no-brainer. If community is losing population, there's going to be less demand for rental housing, and your values are going to go down. It's just as simple as that. So try to pick a market that's growing as fast as possible, or is about to grow fast. And those things can be found in economic development plans. So avoid already hot markets and try to find markets that that are growing in population. And tell you the truth, you can get a lot of your information just by looking at a Wikipedia page about population growth. Let's see here. Oops. I think I skipped 2. Sorry guys, got a little head on my on my thing. All right. So the last thing I promised to teach you guys today before we finish up, sort of wrapping up, before I tell you about the Dealmaker Secret Society that I've been told you about in the beginning, is how to get more offers accepted using what we call our 3-offer approach. Now, this is something that I came up with because I was meeting with sellers, and I was literally, when I was hunting for single family when I first came up with this idea, and I said, if I'm meeting directly with a seller, sellers don't always have the need to just get cash, right? That's not always what their major driver is for selling a property. And so, this all cash, quick close offer, which is what 99% of other investors utilize, it's their only tool in their toolbox, is not what the seller needs. And so when I coach my students and when I'm talking to sellers, the first thing I'm looking for is why do they want to sell? What do they need? What's their real motivation out of this? And we have scripts for this, by the way. It makes it super easy. All cash and a quick close is not always in fact, oftentimes it's not. And so what we'll do is we'll ask them what their needs are. I'll try to craft an offer to meet their needs in a more creative way than just paying cash. And we'll make them 3 offers. We'll always give them a cash offer. We think the property is worth $4 million. Cash offer from me would be 3.5 maybe. Okay. We think the property is worth $4 million. They think it's worth more than that in a lot of cases. We might offer a traditional offer, cash to new loan, for something close to fair market value, right? We think the property is worth $4 million. I'll give you a 3.9, and I'm gonna get a loan and put a normal down payment, traditional type of transaction. And then the third offer we're gonna make, this is where it gets fun and where the business really gets spicy, is with our seller financed offer. I always make a seller financed offer. And I always ask sellers when I first meet them, would you be open to seller financing? And almost invariably they say no. Then when I get down to making our offers, all cash, traditional loan, or seller financing, you'd be surprised at how many people actually want it and agree to it. And what that means is we can pay more to a seller if they will change their terms, right? So maybe the property is only worth $4 million, but if they're willing to carry, I don't know, 3.7 of it, I might be able to give them 4.2 or 4.3 because the leverage will work for cash flow. And so one of the things that we do is we analyze a deal, we figure out how we can use the seller's financing, or maybe their existing loans that we don't, that aren't necessarily the seller's money. How do we take over existing loans? How do we find creative ways to solve problems, to control properties without a lot of money invested? And that's what seller financing is. And that's where it gets really, really powerful. My first deal in Los Angeles was a 23 unit property, 2.7 million, 23 units, 2.7 million. I put $250,000 down, $250,000 down on 2.7 million to purchase. They carried 500,000 second. And I took over all-inclusive trust deed, or sometimes people call that subject to. I took over their existing loan. They deeded me the property. I paid them $250,000, and they took $500,000 on the back end as a second note. Day one, this Los Angeles property, $2.7 million, wasn't a smoking hot price, but it cash flowed at 13% cash on cash return, which is phenomenal in a Los Angeles market or any major city market. That kind of cash flow is phenomenal in a cash flow market. So there are deals, you can get good deals in big markets, and there's strategies to do that. The other side, what I really like about this 3-offer approach and reposition deals is people that have crappy properties. Their property's a piece of crap. It needs a lot of work. It needs the construction. And it needs a lot of, hands-on elbow grease, if you will. Well, that means that the property probably isn't going to be easily financed by a bank, right? It's crappy property. Why would a bank want to finance that? And so one of the strategies that I teach and that we use a lot for reposition deals is a seller financing approach we call master lease option. And what that means is we'll go into the seller and we'll say, listen, I'll give you a little bit of money down for the right to purchase the property for someday in the future. We give you some money now for the right to purchase the property in the future. Then I'm going to invest more of my own money. I'm going to fix up the asset. Meanwhile, I'm going to run the management for you. You don't have to do anything. We're going to do that on a lease. I'm going to lease the property from you and buy the rights to buy in the future. So I get into the property for very little money down. I make all the repairs, and then I refinance or sell after the project's done. And I'm able to pay my seller more for helping me finance it, as opposed to having come up with millions of dollars up front to take down a piece of crap property. He already knows it's a piece of crap. And what's he got to lose? I'm going to come over there and put money in his pocket and money in his asset, and if I don't perform, he gets to keep it. That's his only risk. I'll tell you, this is the best strategy for reposition deals. You can get into deals for very little money, and it's been a powerful, powerful strategy we've used for many, many times. So the 3-offer approach includes a all cash quick close offer, a cash to new loan offer, and seller financing, which is powerful, powerful stuff. I have whole training courses on just creative real estate financing. But before I share that with you, first I want to tell you a little story about my friend named Jason. I'm going to show you a video of him in just a second. If you guys, Leo saw this video before. This video was live recorded at the event where I first met you, Leo. And so Jason's a great guy, still a good friend. He went through my courses, went through my training program, and he went from being a guy who flipped some houses. He was a fairly successfsul house flipper. He wanted to make a mark in multifamily for a lot of the same reasons I just shared with you. And Jason said, Matt, I want to go all in. I want to do this, right? He's in Minnesota. Jason owns over 1,000 units now. Like, he's no small player, right? He's doing things. In this video, you're going to see he's talking about doing big things and buying several hundred units at a time. So let's check this out. I'll play this for you real quick.
Right now, I'm actually working on 4 different multifamily properties. Each one of them they vary from, I think, 217 units all the way up to one is like 420 units. I've went through many programs, as many people have. I think the thing with your program is it's extremely comprehensive. I think what separates you from others is, first off, your experience, being in development, obviously now doing multifamily, in all different types of states. But I think, too, just your personality, extremely down to earth. You actually do want to help people, which I know a lot of people say that, but they actually have no real intention of doing that. But I feel like you have that genuine nature where you want to actually see people do well, and that really separates you from many, many others. So I really do appreciate your program and all that you've done. So listen to everything this guy says.
I took that last quote and sent it to everybody I knew. Listen to everything this guy says. My mom didn't think that was as funny, though. That was Jason. Jason's had a lot of success in this program, and honestly, he had some experience in flipping single-family houses, but the transition to go from single-family to multifamily is not necessary. If you've never bought a house, you don't need to have bought a house to buy a multifamily. And in a kind of extreme way, I would say it's kind of like, if you don't need to learn English before you learn Chinese, right? It's like 2 different arenas completely. So multifamily is a different game. Sure, there's some things that cross over, just like both are languages, both are real estate transactions, but single family, you don't need to do single family in order to do multifamily. Now, one last thing I touched on just before that video, but I want to share with you about flipping options. If you've done any kind of single family home investing, you've heard of wholesaling. If you've been in real estate anywhere for the last 10 years, you've heard of wholesaling. And what that typically is you've got people that just took a class on how to do real estate investing, and they go to these courses and they pay lots of money, sit in a big room, have a guy in front, tell them all kinds of great stuff. And those are great classes. They're great. But wholesaling is typically, it happens where somebody would go out and buy or secure the right to buy a property for a certain price, a discounted price, right? So let's say it happens like this. Your neighbor comes to you and says, man, I'm really struggling. I need cash right now. I'll sell you my house for a deep discount. You say, okay. You don't really want the house, and maybe you don't even have the money to buy his house, but he offered you the house at 50 cents on the dollar, 60 cents on the dollar. What do? Turn that away? No, you secure the right to buy his house for the discount, and you can sell that right to someone else. The problem happens when people do this with trying to do it and trick a real estate agent into signing a purchase and sale agreement. That's not a contract. That doesn't give you the rights to wholesale a property. So that's where a lot of people in this arena get a bad name. But in commercial real estate, the way that we do this wholesaling is what you need to do is have a clear understanding with your seller about what you're doing. And I think that's true for all business activities. Disclose everything, be honest, don't try to trick anybody anywhere, because that's what gets you in trouble. And so what we do when I have properties, and we set up an automated marketing system. I'm going to show you how we do that in just a minute. You've got sellers calling you, people that want to sell, people that need to sell, people that are motivated to get rid of their property. And maybe you don't have the means to take care of, or to take care of any of those. Maybe you don't have the means to take care of all of them. Maybe you can't buy all the properties that people are coming to you with. So what do you do with them? Get a good deal, negotiate the price, get an option on the property. It means you have the exclusive right to buy the property for that price. And you can sell that option, and that's completely the right way to do it. So we teach that step by step, have the paperwork and the documents. And the truth is, once you have an automated system of sellers calling you wanting to sell, you're going to need an outlet for some of this stuff. And I'm also going to show you how we build our buyers list so that we have people waiting to buy the properties once we find them. As soon as we find the deals, we got buyers in place, and that's really, really important. This is a Texas deal I did. This one actually came up recently. This was a 240 unit property in Dallas. The picture's not that great. I took it with my cell phone a while ago. 240 unit reposition deal. Went in, put the property together. I put my deposit down, non-refundable deposit, which was actually turned into an option agreement. Put the deal together. It was a great deal. And we wholesaled this deal for $92,000 fee. Took me about 3 months to put together. $92,000. That was my fee to assign the asset for someone else to purchase. And that's exactly what I just talked about, flipping contracts. Here's another one of my students I'm going to share with you right here. This one's a little bit quicker. Lance is a guy who had worked in multifamily commercial real estate his whole life. And he came in, actually did our course, and then I hired him to be one of my acquisitions managers to work directly for me. And this is a couple things he had to say about that.
The 33 years in real estate and as an ex-appraiser, commercial, residential, all that baloney, that just taught me everything I wanted to know that I never learned. Even at Marcus and Millichap, or even at Great Western Bank, or Nationwide. I'm serious, it really filled in a lot of holes and gave me the information I was wanting.
Now, unfortunately, I couldn't convince him to say, listen to everything this guy says, but Lance is a great guy, and he had worked in a lot of different places and done a lot of different kinds of transactions. He's a great acquisitions guy. So this system, our Dealmaker Society program, is literally a real estate investment club of like-minded people looking to make deals, looking to join a network, looking to grow in the multifamily space. And so let me tell you what it means to be a deal maker. When you join Dealmaker Society, the first thing we're going to do is we give you access to, I took all of my training programs that I've ever recorded, including events I've done internationally with the Tony Robbins group, and I spoke at Harvard and did all kinds of fun stuff like that. But I took all my training courses and we put them into a Dealmaker vault. And inside the vault, you'll get access to it immediately. You get all these classes. Multifamily Millions is our standard class. It's our starting class. It teaches you how to do, how to underwrite, how to analyze, how to make offers. We talk about the 3-offer approach in detail, like we just talked about a few minutes ago. We talked about a check down system, which is a whole nother level of fun stuff in the multifamily space. Multifamily Millions can take anyone from ground zero, no experience in real estate whatsoever, and teach you how to find sellers, make offers, negotiate multifamily deals, and even starts talking to you about how to get bank loans and partners together so that you can buy apartment buildings. I literally use this to train my acquisitions team And this is A to Z, nuts to bolts, paint by numbers, however you want to put it. Everything you need to know in multifamily millions is in that course. It's about an 8-hour training video, edited, cut down. You can download it. All these courses you can download, put on your phone in an MP3s, and listen to them while you're working out or doing other stuff. The other courses we have are creative real estate finance. I teach you all the tips and tricks and techniques that I was telling you about earlier. Raising private money. We talk about how to put partnerships together, how to attract investors, how to find, pool investor capital together. One of the big things right now, we're doing a $5.6 million raise on a deal in Texas, and we'll raise that cash probably in $150,000 to $250,000 increments, right? So a whole bunch of people will be putting a little bit of money in, which spreads the risk, diversifies the investments, and many hands make light work. Everybody gets to win like they're investing in a big project, but no one has to make an investment like they're buying a big project. And so it's a really powerful way to put deals together. So we teach that, how to raise private money. By the way, you can do that for film, startup, tech companies. Raising capital, raising money is universal. It's a whole other business. It has nothing to do with real estate. It just has to do with what investors want to support, what kind of deals investors want to get involved in. We talk about wholesaling multifamily. We just discussed that. I teach you how to do appraisal. We have videos on making offers that get accepted, and much, much more. Literally over 100 hours of video training that I've sold, that we've sold to audiences, people have used and perfected, and it's all here inside of the program. I know you're probably thinking this is going to cost $50 million, but it's not. I'll show you what it looks like in a minute. We do coaching 2 Saturdays a month, get together as a group on a video conference just like this, and we look at deals. We go over our members' deals. Sometimes I step in and coach. Sometimes I do some training. But mostly we just look at deals together. We form partnerships together. We figure out how to do this business better. And so everybody grows when we're communicating, when we're talking, when we have that synergy. It's powerful. So a lot of times what happens is one of our guys comes in with a great deal, and the other couple guys say, hey, man, I want to invest in that. And they put little groups together. They put little partnerships together. If you're going to be in a business that requires a team, this is a team sport. Start putting your team together first, because you're going to need them. You're going to need people to do certain things. And the truth is, there's a lot of things have to take place in order to buy an apartment building. You got to find the deal. You got to get the debt financing. You got to get the equity financing. You got to manage the deal, asset management, property management. A lot of stuff goes on. So for any one person to want to do all those things or be able to master all those things is kind of silly. I want you to get financial freedom. I want you to know how to do all these things. I want you to know how to master the systems and the processes and build your team so that you and your family can be financially free and live with a legacy to pass on to future generations. Coaching happens twice a month on Saturdays, and we have a lot of powerful things that go on in right there. Inside of this Dealmaker Society program, you get all of our contracts, documents, and scripts, so you can talk to other sellers and buyers like you've been doing this for 20 years like I have. You get all the documents, contracts, options, lease options, master lease, all those documents come with this thing and all of those contracts. So you get all the pieces. We don't hold anything back. The other thing I'm going to do for you is you get an affiliate link to our buyers list. What this means is you're going to get a funnel that's linked up to you. And I know this thing looks ugly, but it works better than any of the better looking funnels I've had. What this is, we advertise this to people looking to do a 1031 exchange. Those are motivated people that want to buy property right now. They're looking right now. They can go in here, type in what they're looking for. I send it out to all my students, and we go hunt down properties for them, right? So imagine if you got an email that said, hey, I'm looking for a 40-unit deal in Toronto right now. I need to buy it in the next 90 days. What do you do? Well, that's what Dealmaker Society is all about. I'll show you what we do. We get you a list of owners in a market. We teach you how to set up an automated marketing system so that you can attract people that need to sell, not just want to sell. And we're able to go out and hunt down properties with laser focus, like we just described. So when you do have a buyer looking to buy something, we can go find it for them. This group is powerful. It's a lot of fun. Skipped one. Obviously, the network's powerful. This is one of our Christmas events we did, which is a lot of fun. We do stuff. We try to do stuff several times a year, which just makes it a big social club. And of course, the real powerful thing in this is I love partnering with people that I coach. Here's the thing. I know that if I coach you, we work together and we have similar values. We have similar ideas. We have similar understanding of how the business works. And so partnerships are just a natural flow out of that. You're not required. If you take my course, if you do my coaching, or if you even join this membership group, You are not required to do deals with me. But what typically happens is we begin to form relationship, trust, synergy, and things like that happen, and it's powerful. Powerful stuff happens when smart, focused minds get together. You're unstoppable. There's nothing that can stop you. You get a group of people together that are focused on the same thing. So when you become a member of the club, the Secret Society, we're going to literally get you a list of owners in a target market. Whatever city you choose, you get a list of owners in that market, and we set you up with an automated system that markets to them. We use text and email and voicemail drops and all kinds of automated systems, and we teach you how to program that so that your leads, you don't have to think about marketing. You don't have to do marketing. What I found is if I have to go do something to get money, I got to fix a problem, because I want that leads to come in without having to do stuff. So we'll set it up at the beginning. Automation is the key. Automation is where things are going. We give you access to our buyers list. I just told you how we develop the buyers list. But when you find a deal that you tie up, you like it, you got the exclusive right to buy it, then you can sell it through our deal exchange, exclusive off-market deals. And you have access to our buyers list. So that's really powerful as well. We want to work together. We teach you how to appraise properties, how to create offers and use the 3-offer approach. And we teach you how to make offers that get accepted. Probably one of the most powerful things that I'm able to teach, because I'm really good at it, is seller financing. We talked about a few of those examples, but when you're able to go in and get properties for low money down, it just accelerates the percentage of profit that you make, right? If you're gonna make $1 million on a $100,000 investment, that's a killer deal. If you're gonna make $1 million on a $10 million investment, not so much. So it's all about how do we use the seller's existing financing to leverage ourselves into a better position. Last but not least, flips are easy, but partnerships and raising money is easier than you think. Like I said, we've spent a lot of time focusing on, how do you get financing for this? Some of you guys probably have friends, family, and associates, business associates that want to partner with you already. Some of you have probably may have never even imagined asking somebody to invest with you in anything. But either way, no matter where you're coming from, the knowledge of knowing how to do it is going to help you. Even if you just want to invest in someone else's deal and make it really passive, right? I'm going to put money in. I just want to collect checks. I don't want to do any of the work. You want to know how the system works in order for you to make wise decisions in your own investing world. So the one thing I'll guarantee you, inside of Dealmaker Society, you will learn how to find properties, flip properties, fund properties, and get financing that you're going to need for all of this and everything that goes along with that. And I always like to, this is kind of my own quote, but deal makers are people that can go into any market under any circumstance, under any condition. The property's messed up, the economy's failing, things are happening, bad things are happening, or good things are happening. Maybe the seller's in a weird situation, but it's when you can go into any market under any circumstance and make deals and get paid, that's when I know that you're a deal maker. And so our goal, my mission inside of Dealmaker is to identify who you need to become in order to be a deal maker and help you grow into your best potential to make deals and get paid. Look, real estate is literally the byproduct of you being a successful person. Real estate is just a means to an end. Hopefully, real estate is a means to financial freedom. But the real growth, the real power, and the real value is when you're able to invest in yourself and be able to go into any market, make deals, get paid. That's why I call the deal makers the Navy SEALs of making deals. So the key is, again, even in that elite military force, they focus on the individual. How do we make the individual perform at their highest top level every time? And what that comes from is repetitions, reps. I wish I could tell you I'd just send you a pill and you'll be a badass deal maker. But the truth is, it's repetition. Repetition, talking to other people in your network, repetition, getting the training, repetition, doing the work. You get the reps in, you become a master, and you grow. And when you're a deal maker, you can go anywhere and do anything. We talk about raising money. You could raise money for film. You could raise money for startup companies, tech companies, maybe something you're passionate about. Maybe you have a charity you want to raise money for. Once you know how to do that by being a deal maker, you can go do all those different things that started with just a little idea of, I'm going to be a real estate investor. Well, imagine that when you become the person that can do real estate, you also become the kind of person that can do lots of other things too. And it's powerful. It's really powerful. And the reason for that is we focus on what I call the 5 pillars. We teach you how to market yourself and your business so that people will want to do business with you. They're going to reach out to you. We're going to teach you how to market to sellers, so they'll call you. We're going to teach you how to market to people that want to buy properties, so they'll call you. We're going to teach you how to market to people that want to invest with you as a partner and give you money so that you can grow your empire and their empire at the same time. Talk about how to grow your marketing. So marketing, we teach you how to sell. You know, buying properties is actually a sell. You need to sell the seller on why they should sell to you. They got lots of options, but we want to sell them on why they want to sell to you. So marketing, sales, negotiation, systems, and your financial intelligence are the 5 pillars of what it takes to become a deal maker. Deal maker is literally the art and science of creating a have-it-all lifestyle. It's all about who do you need to become in order to do and have the things you want in life. Now, it's a lot of stuff. We're giving you lots of training, hundreds of hours, over 100 hours of video training, group coaching twice a month, getting you a list of people in different markets. Different markets have different accessibilities depending on their, different regulations or different municipalities. But you're going to get a list of sellers. We're going to teach you how to set up an automated marketing system so sellers are calling you. And most importantly, we're going to underwrite and make offers together. We're going to do all of that for a ridiculously low price. I would love to hear how much you guys would guess this would be, but I'm going to tell you, it's probably nowhere near what you're thinking. Now, I normally do this for $297 a month, $297 a month. It's a membership, no contract, cancel anytime, come in for $197, get to check out all those video courses. What do you have to lose, right? It's ridiculous. It's not about the monthly membership fee. It's about the community, the network, and the synergy. It really just comes down to that. So sign up for it's $197 a month, special for you guys today. You go to dealmakersociety.com/special. You sign up. It is $197 a month for you. You get all of the training, you get all of the classes, all the courses, and you get me as a coach. I'd love to have you be part of this, but if it's not right for you, we talked about who it's right for and who it's not. If it's not right for you, we don't want you part of the group. We want people that are going to work hard, excel, share information, insider secrets, as we like to call it, and share tips. That's why we call it a secret society. We share secrets with one another. We get better together. We grow together. So if this isn't for you, please don't do it. If it is for you, make a decision now. Here's the thing. If you do nothing, nothing will change for you. But if you make this small investment in yourself, there's a world of possibilities that opens up. I'm going to stick around for a few minutes for Q&A, but first I'm going to run a few minutes of let you hear what some of the other deal makers have to say. Are we good with that, Leo? Am I good for another 10 minutes here? Yep. Okay. So here's what other deal makers are saying, and I will be on the back end to answer any questions that you might have about the program.
If you want to learn real estate and get the game in this business, you need to come see my man, Matt.
It's just as easy to do multifamily apartment investing as it is single family investing. I've taken I've gone to other real estate events and courses, and basically you have a speaker in front that is a salesperson, and you never see them again, and you never hear from them again. But unlike this course with Matt Skinner, that he's here, you have his contact information, and he's going to help you with every single deal.
My name's Andrew. Just finished up this Dealmaker seminar we did. Tons of value, tons of good information. Can't wait to get out there and start making deals and getting paid.
Matt Skinner is great. He actually was very knowledgeable about multifamily residents. Really looking forward to the next steps with him. Understanding a little bit more about how to secure funding.
Matt's Rule 92 told me the velocity of deals that were made in the economy. Didn't realize it was so large. Always worried about deal growth and where you're going to fund the next deal. Didn't realize the velocity of deals in the U.S.
Definitely come to deal makers. If you want to go to other ones, you're welcome. But I'm sure if you go to there's other companies and this, you will end up here.
My name is Wes. I just got done doing the Dealmaker class here in Dallas. Single family guy, investing. I'm excited to do apartments now. Thanks, Matt.
I feel much more confident stepping off into something that was comfortable but not fully known. And this seminar really highlighted all the things that you need to be aware of, give you a model to work from, and really makes you feel like, gives you the confidence to go out there and take the steps to follow the process to get the deals that you want and to make the money that you deserve.
I love the way that Matt approaches owners and really learning the marketing strategies that he uses. His simplicity, he's very organized, and he just seems very approachable.
The real case that he was like showing us how to solve them, how to think like an investor, like a deal maker, that was blown away. Definitely something new, and something I'm gonna take away and definitely apply it.
I think he's very knowledgeable, and he's just a real cat, real individual. He just seems down to earth, and he just knows what he's doing when it comes to apartments.
He has a lot of different techniques on doing deals, stuff that I didn't think about before, that got my brain ticking.
I've always been interested in apartment building opportunities, and right from the first opportunity I had to attend Matt's introductory session, I could see that he was authentic. He had a story. I was really fascinated by his story and his beginnings, and it seemed that he had something to offer. He has the experience. He had business opportunities that he shared, both the good, bad, and the ugly, and it seemed that it was very credible what he had to offer.
Matt is very knowledgeable about the apartments. As an investor in single-family units, I want to graduate up to apartments. This is exactly what I need, and he's certainly helping me move in that direction.
Real estate investment is something that's been behind the scenes for almost I've been trying to do it for a long time. I think this course has been great. I think I came to the right place.
Matt's presentation was pretty much the only one that really caught my attention.
If you want to learn real estate,
well, I guess I chopped you into that, but that's okay. I've been posted the link to the video, or posted the link to the membership page in the chat room. It's dealmakersociety.com/special, and I'll just take a couple minutes if anybody has a question about what we talked about today, about the real estate training we did today, or about the membership, or about our society. I'm happy to answer any questions. Yes, Coach.
Hello, Matt, can you hear me?
Yes.
Yeah,
Great presentation.
So Matt, wonderful presentation, Matt. So I have a question for you. Like, I have most of my investments in downtown Toronto, the condominium. So question for you, should I sell the condos to, invest into the flipping property, or should I take equity and that use the equity to flip the property? Because I'm planning for 2021 to have like around one flip kind of a quarter, so around 4 flips in 2021. Okay. And buying say around $600,000 to $700,000 kind of the home, and putting around 100K probably, and and then maybe hold it for 6 months or 3 months, depending upon the market. If it doesn't sell, I will rent it, but that's on my plan, like around 4 flip a year. So what you would recommend? Should I pull out the money by equity, or should I sell some of the condominium, and then what will be the strategy as per your experience?
That's a really good question, and to be 100% transparent with you, I really don't have enough information about your particular situation to make a blanket decision. But I'll say a couple things about that. In general, condos are usually the first asset class to fail in a down market. So they're usually the first asset class to lose money. So be cautious of that, especially if they're overdeveloped. I know Toronto has a lot of overdevelopment. There's a lot of empty condos. And I'm not saying yours are bad investments at all. I'm just saying traditionally, condos are the first asset class to fail. They're also the last asset class to succeed in an up market. The reason for that, condo developers overdevelop, people don't buy them, the prices fall. It always happens. People just buy. I actually did that in 2007. I was a condo builder, so I know it pretty well. But then as you notice, like first the housing market heats up, the economy heats up, and once the economy's hot, people start building condos again. It gets crazy, right? Because the supply had been absorbed from the last market cycle. So I would be cautious about. I am cautious about condos as a condo developer and as someone who owns condos as investments still to this day. I'll be cautious about condos because they're the first asset class to fail, last asset class to regain. So that's something you want to be conscious of.
Yeah, the reason, like, I bought it very early, like, 2005, 6, so on an average around 500 per square feet, and now on an average around 1,200 to 1,500 square feet, almost triple the price, in the downtown Toronto. So it's kind of the hype. So I'm thinking, can I just maybe, move some of them, keeping that scare in mind. If market goes down, so maybe half of my inventory, sell it off, and then use that money to kind of the finance my flip. You know what? I will make maybe a kind of the little private session, a coaching, a paid free. I'll reach out through Leo and see what kind of arrangement. I think that will be the nice way to communicate with you and get your advice. So thank you, Matt. It was very nice.
Thank you.
Thank you.
Our typical apartment investment for our investors usually running about 18 to 22% annual. We call it IRR. Now that doesn't mean you make $100,000 investment and you get $20,000 back that next year. What that means is when you combine cash flow, which is usually between 7 and 10%, plus the mortgage pay down that your tenants pay down, plus the profit or the appreciation that goes up. So there's 3 components in this, right? Profit, mortgage pay down or principal reduction, and cash flow. You add those 3 together, and they usually average about, for our deals, between 18 and 22%. And we call that an IRR. Now, if you're an accountant or have an MBA, you're too smart for me to begin with. So I'll just tell you, a real IRR would also include the tax benefits as value. That's a very difficult calculation, and so I just leave that out. So from our purposes, IRR is the 3 pieces that I talked about: profit, cash flow, and principal reduction. So what I was going to say about that was, if you're weighing your options, what you want to do really just comes down to what's your strategy. If you bought condos well at the bottom of the market and they're probably topped out now, it's the same thing of saying, hey, you made a lot of money at this, craps table. Take your winnings and go cash them in, and I would highly recommend that with condos. Now, what you want to do with that money next, you mentioned flips perhaps. That's a great way to make fast cash. You can flip houses. You can flip rice commodities. You can flip anything, right? You flip everything. But contract is to buy low, sell it higher, make some money from the profit. But if you want to invest in multifamily, it's really great for folks that want to grow their wealth long-term, cash flow, tax benefits, and growth. We didn't even talk about tax benefits. Did you know that almost all the cash flow has a very good there's huge tax benefits to owning multifamily. And I'm sure that I can't speak to the details even in the United States, let alone and some things going on in Canada, but I do know, universally known, it's one of the best tax havens that there is.
Yes, Matt.
I think you are based in US, Matt, in my understanding, or in Canada?
I'm in Los Angeles.
Oh, okay. So okay. Thank you.
Yeah, I'm in Los Angeles. Thank you. Any other? I got probably time for one more, huh, Leo?
Yeah, one question here. Actually, 2 questions. You were telling about the investments, and of course, it is recession-proof in our understanding. But at the same time, the current market is having little more unknown things just because of COVID-19. Because we are thinking, of course, condo can go. At least the rental price is going higher and higher in Toronto and many areas. But at the same time, due to this employment information, of course, if they lose job, the first thing they may think of is not paying rent. And of course, the eviction is going to be a bigger problem, probably in Toronto as well as in some part of US. So what is your plan B towards that protection? Not the plan A, I don't know, but if you can tell us that at both, yes.
Yeah, that's a great question. And, a lot of things are so new, we don't really know what the next steps are going to be. In March, when they said we were going to quarantine for COVID, it was supposed to be 2 weeks. Here we are months later. Who knows how many more months it'll go. So I don't think anybody who is supposed to know really knows what's going to happen. And that causes a lot of uncertainty. Mm-hmm. So I'll talk about this from 2 different perspectives, Leo. And thanks for this question, because it's a good one. It's a really good one. Number one, we'll talk about, answer your question directly. What do we do with the existing properties we have and the tenants that we have? But number 2, what's the opportunity inside of this? And I'll talk about number 2 first. First of all, I've seen a huge, not an increase in, I'm not seeing people drop their prices right now, but I'm seeing a lot more people willing to entertain the possibility of selling. When people get concerned and people get nervous and they say, for a lack of better terms, the shit's going to hit the fan. I need cash. I want to go to cash. And so folks are willing to sell some things right now at a reasonable price. If things get worse, the reasonability will go down and our prices will get better. So we have an opportunity for buying inside of this. And hopefully we'll get this under control and people will go back to work and things will be okay. There could be long-term, there could be long-term damage from this, but I think everybody wants to get back to life, right? And I think that's a big thing. The second component to that is, I'm not up to speed on perhaps some things that, politics in Canada, but we've been passing bailouts and helping people that have lost money in this, mostly people working class people, I should say. And I know that's good. And I think there's gonna be more and more and more of that in both of our countries as time goes on. There'll be more government assistance for more people. And that actually, regardless of what you think about that politically, is a good thing for apartment owners, because government will step in and subsidize folks that can't pay for their affordable housing. Now, I'm kind of talking about this on a micro level. If you're talking about Class A apartments in Miami, doesn't really relative to this. Those are people that elected to have an apartment. I'm talking about Class C, Class B, working folks, people that live in apartments because they can't afford a house or can't afford a house where they work. And so these are folks that have to live in these houses. And so there's a lot of stability inside of that. Plan B though, Plan A is this. We haven't had any problems with collections of rent yet. That's the good news. None yet. Not even people like trying to play the system yet. So that's really good. I was actually shocked that happened. So that hasn't been an issue yet. A big issue is when we have vacancies, showing the property, nobody wants to come see, no one wants to show them. No one wants to look at an occupied unit, so the showings are an issue right now. But I think, that has to clear up in the future. So honestly, Plan B, it's a great question, Leo, and I wish I had a better answer for you, other than the age-old wisdom of you make your money when you buy. If you're over leveraged, if you're running thin margins on your cash flow monthly, you should be able to, take a 15-20% dip in paying clients, and still be able to pay the bills, right? So it should be a pretty nice thick margin. Not everyone runs or buys their properties that way, but you should be able to, be able to take care of some business, or at least have some reserves to take care of business in the event that things do go bad. And we do both, reserves and purchase well, so there's a margin for error. And then, there's nothing wrong with tenants getting financial assistance to pay their rents.
Yeah. So I want only about 1 minute, 1.5 minutes explanation. How can you give confidence for your investors in this market about a new purchase or new investment in these terms?
How do I do what?
How can I give more confidence towards the investors towards buying a property with you or with me or anybody? Because they may say about
two sides of this, right? Like, we're getting more deals because there's more sellers, but how do we convince the people that are wanting to hoard cash perhaps to make an investment? That's a great question. Ultimately right now, because of uncertainty, certainty will win. So an uncertain deal is new construction. An uncertain deal is reposition. Those have more uncertainty, more risk factors. Buying an apartment building for cash, it's a different strategy. But in my view, almost risk-free. I'm gonna say it. I'm also gonna give you the caveat, I do not own any apartment buildings in all cash, but it's almost a risk-free proposition, especially in a market like Toronto, LA, San Francisco, these big cities that have huge demand for rental housing, low cap rates, 2 cap, 3 cap, and new investors look at this stuff and go, this doesn't make any sense. I'll never find a good deal. But people buy 1 and 2 caps because it's like putting your money in a safe place that is in a lockbox. No one's going to take it. They're not going to lose it. It'll probably go up in value, and you're getting tax benefits from it. I mean, it's better than putting it under a mattress, better than putting it in a bank, better than putting it in a safe, better than risking it in a stock market. It's just a safe. So it's like, it's better than buying gold, because someone can break in your house and steal your gold. No one can break in and steal your apartment building. So if you want a safe, secure, stable place to put your cash, buy an apartment building with cash, no debt, is basically a risk-free proposition from my perspective. Now, that's not financial advice. Don't take that to your, don't go tell on me that I told you it was guaranteed. But that's my opinion.
Thank you. Thank you so much, Matt.
Thank you, Leo. If you guys hope to see you on the other side, Leo, this has been a great opportunity, and I wish I got the opportunity to be able to interact with more of the folks. Perhaps I'll be able to come back sometime and do that.
Definitely, yes. Thank you so much for your time, and of course, the audience may have learned a lot about apartment buildings. Of course, even my son is listening that, and he came in and asked me, what is multifamily? Because he knows single detached and apartment, that multifamily wording was not clear for him. He came and asked. So like that, people are so curious, and I will make educated many of them, of course. Thank you for your time, and very soon we'll meet again.
Thank you, Leo. I'll see you soon.
Yes, thank you. Bye.